All right, welcome back to the New Equity Network Show. Michael Yorba, your host, broadcasting to you live from 1160 AM KBCE, DFW's Business Authority. We're talking with Jared Febbroriello and Tom McNamara in the studio with us today. All right, Jared, we spent a lot of time on the last segment talking about the Reg A, Reg D differences, what some of the breakthroughs on the rules and the regulations are. We didn't get a chance to talk too much about your website, Corporate Crowd Fund, and the kind of investors that can use it, the kind of companies that can use it, and what the process is. Can you walk us through that?
Sure. So with respect to investors and companies, we've tried to make the process of using the site extremely simple. Really, all you have to do is go on and click the register button at the top of the page, put in your email address and a password, and at that point, you can get started. That will allow you to view some of the profiles for companies, but it will sort of restrict you from others. What we do is, as you get interested in certain companies, you're required to give more information. So, for example, if you wanted to look at the filings or the information for a company that's doing a Reg D 506B offering, which requires that, which basically says that you cannot use any general solicitation, then you would have to have already gone on and verified that, or at least stated that you're an accredited investor. If you're a company and you want to actually put an offering on the site, then obviously you have to give pretty detailed information about who you are, what your company is doing. With respect to requirements for investors, we really don't have any. As I said, the site is going to sort of prevent you from doing certain things unless you've given us the information. But if you just want to stick around and wait for, the other crowdfunding acts to pass and you want to invest at that point, then we're happy to do that. If you're accredited and you want to invest now, then you're also free to do that. For companies, we're just basically looking for good deals that preferably have revenue, deals that will provide a return to the investors on our site.
Okay, so the deals that you've got on the website right now, are they a mix, pre-revenue and also revenue, or are you primarily trying to find companies that have already proven the revenue model out?
At the moment, they're a mix. We've got companies that are trading on the over-the-counter markets. We've got companies that are sort of doing other projects but already have shown some success, and we've got at least one startup on there.
Right. All right. Any questions, Tom, that you have for, you feel free to jump in anytime you want.
Well, it does look like you're really opening the door for the investor. He has a lot more options, and he, of course, has the ability to see a lot of things and make comparisons.
We're definitely trying to do that. It's the goal is to get as much information out there as possible and let the crowd vet the deals and allow you to invest with people that you know and trust rather than buying stock from unknown parties over the counter.
Okay, so really as an investor, number one, the primary way to get equity in a deal that you like, there's still an accreditation issue. You got to be accredited. For most of these people that are looking to invest into a project.
Well, again, that depends on the company and the exemption that they use. So, for example, if they're doing a 506B, they're allowed to do to sell shares to up to 35 unaccredited investors as long as they're sophisticated. So, we really leave it to the company and counsel to decide who's going to be right for them based on their interpretation of the securities laws. We're really just an intermediary. We don't charge anybody for that service. We're just trying to change the capital markets and provide sort of a playground for everybody to coexist.
Okay, so what I'm getting, because I've seen some of these crowdfunding sites, and what they're doing is they're charging a commission, kind of like an exchange charges a fee to make an exchange. And what the other question that I had that I didn't get a chance to really bring out is this. as we get down the road in crowdfunding, and we were able to now have equity as our investment, as we go in and find a deal, hopefully it's vetted properly, we get into the project, the secondary market for this stuff, because you're still in an illiquid investment at this stage. How do you see that unfolding as we get down the road?
Well, for the moment, Reg D is, again, for private securities, but a company can always register those securities. So at any point down the road, the company could file an S-1 and register the stock that was issued under their Reg D exemption, or on June 19th, they could file under the new Reg A plus rules. But ideally, the way I see the market going, I think that we'll start to see some companies sort of putting their toe in the water, and instead of issuing under Reg D and then registering later, perhaps they might just register under Reg A plus, sell free trading stock, and then as the market starts to build up, they'll just file a 15C211 and should basically have a market already built on the over-the-counter. If it's a big enough company and they take off, there's a potential that they could move direct from crowdfunding to the NYSE or the NASDAQ. There's nothing, the securities that are being sold are fully compliant. There's no real difference between what you're receiving as an investor, no difference between any other deal. So, we could see some companies go direct to IPO and others, again, create a market.
But I'm talking about the secondary market, not necessarily going through the process and then becoming public and selling. But what about the secondary market prior to being a publicly traded company? I mean, while it's still in the crowdfunding arena.
So for the Reg D shares, again, those are restricted securities. Individuals would be allowed to make private sales, which means,
That's what I mean. I'm talking about having a platform that, like a crowdfunding portal, only a crowdfunding portal that focuses on secondary trading of private equity that's been invested in through the crowdfunding processes. Do you see that happening?
Well, there's already sites out there that allow for that. Second Market is probably the biggest one at this point. Investors that buy securities through corporate crowdfund could go to Second Market and trade them if there's a demand for it. With respect to securities issued under S1 or Reg A plus, there are no restrictions on private sale. So again, these are free trading securities. They could be sold really to anyone under the rules.
Okay, so somebody has two options here. They can go in and look at the new deals on the crowdfunding portal that have come up there, and then they can also go to a secondary offering site and see what's already been monies, a company that's already done the capital formation or the initial capital formation through crowdfunding, and sift through those projects. Is that what I'm hearing?
Yeah, that's correct. The way I see it, I think companies will probably seek a variety of different service providers. I know for us, we've had issuers that are also listing on other sites, or listing their offering on other sites, but they come to us because they would rather leverage their contacts through us and not get charged, rather than do the same thing through one of the larger sites and get charged a 10% commission.
All right, there is another one too, but let's talk about exit strategy. You touched on it just a second ago, because everybody wants one. I mean, bring out the potential exit strategy. One of them was, IPO, right?
Mm-hmm.
Okay. The exit strategies for the investor and the exit strategies for the companies, because everybody builds something that hopefully they can sell to AT&T or what have you. You know what I mean?
Right. I mean, the exit through merger is always going to exist, or acquisition. And again, that doesn't really change. I think that a company with strong management and good counsel can always set up securities that are going to help the company without hindering the ability to do a merger or acquisition down the road. With respect to a public offering, I think that you might see larger secondaries, but the benefit of receiving Reg A plus registered shares is that there's almost an immediate exit strategy, assuming the company sells to, a few hundred or potentially even a few thousand shareholders. That is a market by itself. Whether it is, formally put on the NASDAQ or the NYSE, or if it's just created informally over the counter, that's still more liquidity than you would have as a private company or as a shareholder holding private shares.
Okay. All right. We got about a minute left in the interview. Any words of wisdom before we close out on this on the segment, Jared?
I guess my words of wisdom would be, for those of you that are not familiar with this, if you have companies or you're considering investment, get educated. Start reading, because I think that this is the wave of the future. And if you don't learn about it, you're probably going to get left behind. For investors, if you have people in your life that you want to support, this is a great way to do it.
It is. All right, Jared, thanks for being on the show. Really appreciate that. Jared Febbroriello. He is Secretary-Treasurer of CorporateCrowdFund.com. And Tom, thanks for that question, Tom McNamara. We'll be right back on the other side of this break with a new guest for us, Greg Ryder, CEO, Angel Investor Network. They've got they're going to bring angel investors into the picture now. So we'll be right back. You've been listening to New Equity Network with your host, Michael Yorba. We'll be right back.